We begin with the continuing conflict in Iran. Harvard professor and former IMF chief economist Ken Rogoff chronicled the U.S. dollar's rise and the beginning of its decline as a global currency in his latest book, Our Dollar, Your Problem. It turns out that it's not just oil and aluminum at risk in the Iran war. It also may be the status of the dollar. Ken, in your book, Our Dollar, Your Problem, you talk about the position of the U.S. dollar as declining gradually over time in relation to other currencies. We now have a conflict in Iran. Is that affecting that decline?
Oh, I don't think there's any question that it will affect the decline. It could go either way. It depends on how it comes out. If the U.S. comes out incredibly triumphant, there's peace in the Middle East, everyone, looks to the United States to maintain peace, that's one outcome. Another outcome where it's viewed as a strategic defeat and China gains. But, it's a step. I don't think either way it's changing a dynamic that was going to happen anyway. There are things on the outside that it influences. So it's definitely going to help China accelerate getting other countries to use its currency, particularly for Chinese imports. For example, if China buys oil or if China buys anything, it's going to help in that dimension. But it's also affecting global debt because everybody sees a lot of need for military expending. The U.S. is the biggest debtor in the world. We lose the most when global interest rates go up. So there are pressures from the outside coming from everybody's trying to look for other options, and pressures from the inside that we're, running this big debt that is manageable if we wanted to, but there's not a lot of will to want to.
Is the strength of a currency reflective of the strength, including military strength of the country? In your book, you go back to the Armada, actually, with Queen Elizabeth I and the Spanish. Is this potentially a barometer of how the world is perceiving the relative military strength of the United States?
The military strength is a piece of being the dominant currency. And here, just to be clear, we're talking about the dollar's market share, which reached an incredible peak about 10 years ago. But also, military strength gives you the ability to affect negotiations. They can be over very unrelated things. They can have to do with how the IMF works. They can have to do with how global banking regulation works. So having the military power at the end of the day says, well, of course it matters for a lot of things. And if you're looked at as weaker, it hurts you.
And part of the protection, historically, going back to like 1974, was of the Gulf states, countries like Saudi Arabia, because of U.S. military protection. Now, as you say, it depends on how this all plays out. But if, in fact, the United States does not have a triumph of some sort over Iran, does it really undermine the confidence of the Gulf states in using the U.S. dollar?
Well, the Gulf states are a really important anchor of the U.S. dollar. And, it's interesting you picked the 1970s because it really fell in the 1970s. Europe left the dollar. That's worth remembering. And the Gulf states, when they did their recycling of their petrodollars through the United States and priced oil in dollars, I think it was sort of helpful, although nevertheless, that period was down. I don't want to overstate the petrodollar. I want to be a little careful about that because oil is a very flexible price. We're all staring at Brent crude, and it's still here, and it goes here. It can move very fast. So it's a little bit like my paying with Visa or MasterCard. It matters a lot more whether goods, manufactured goods, are priced in dollars. But it's important. I mean, it fills a lot of roles. The Gulf states use dollars. Saudi is still pegged to the dollar. I don't know how long that's going to last, but they still are. And because so many of them are pegged to the dollar, rotate around the dollar, they hold more dollars. They've been very important to our business model. Not as important as China, but they've been important. And it's unclear how this is playing out. I mean, I think a lot of the Gulf states are looking at us and saying, wait, I thought you built those bases to protect us. I didn't know you built those, various military complexes in our country so we could be target practice. And are you on our side? Are you on their side? Like, what's going on? That's been a delicate dance. I don't think we know how it comes out yet. So, China's kind of playing it cool. A lot of people say they may benefit. They might, but I just think we have to see what the end game of this is.
The Chinese might benefit. Will the yuan benefit? Because
of course,
we see Iran saying we'll let oil through the Strait of Hormuz if you sell it in yuan, for example. And China certainly wants more transactions denominated in
They're
yuan.
doing quite a bit in crypto too, also, by the way. Yeah, I mean, if they get paid in dollars, we can sanction them immediately. They're putting it hostage. Why the heck should they do that? That's certainly significant. But the big thing of the Iran war in the future of the dollar is it's raised global interest rates. They were going up and up and up. So if I look at the dynamic of how I see things unfolding, it's that there's this pressures from the outside that are very slow moving, but they're happening, to have a more multipolar system. And there are problems on the inside where we're the richest country ever, but we still have trouble paying our bills and running these crazy large debts. There's no political consensus in either party. The Republicans don't want to tax anyone. The Democrats think 1% of people can pay, which doesn't add up. And so we are racing towards having a fiscal problem. And then central bank independence becomes a problem, because when you have a fiscal problem, you're kind of looking for the central bank to bail you out. And if all that's happening, that's sort of what happened in the 70s, in a way. It undermines the dollar.
So what are the metrics that people should use in figuring out where we are in the relative prominence of the dollars? What do you look at? I mean, for example, were you surprised that the dollar was not more of a safe harbor when the Iran conflict broke out?
So there are people in finance who are doing all these papers showing that the premium we used to extract on longer term debt is gone. So on short-term debt, there's still a premium to dollars. It's still the safest asset. Long-term debt, it's not there anymore. I mean, it's safer than, let's say, some African or South American countries' debt. But if you compare it to many European countries, Japan, it doesn't rank that way. They used to. And so there are ways in which what we're getting out of the deal is going down. Now, we can crowd everything into short-term borrowing. And Secretary Bessent said, I think interest rates are going to go down. I'm going to borrow more short-term. Okay, but that's very risky. In fact, I think he was saying not to do that 10 years ago. And so we're losing, you see that in many measures. On the other hand, these things are very slow moving. If you do foreign exchange trading, is overwhelmingly goes through dollars. If you do currency of denomination of debt, it's overwhelmingly dollars. Of course, part of that's because more than 50% of the debt of the advanced countries is ours. More than that in global bonds, it might even be 60 or 70% is ours. So there's a lot of liquidity in it. I still remember 20 years ago, a prominent European economist getting up at a meeting and saying, today is a big day. There's more euro debt than dollar debt, which was true that day. Well, how did that work out? I mean, I think this is a slow moving thing. We're seeing it in the interest rate spreads. We're seeing it in reserves, so what countries are choosing to do. We're seeing it in actions that the Europeans and the Chinese are taking to develop independent systems. But this isn't something the private sector is just going to do. It's mostly the Chinese, the Europeans are leading the way. We are digging our, grave, so to speak, and it's all the actions of the governments. It's not something that's happening overnight.